Okay. All right, so today is Monday, March 24th, 6 minutes after 4 p.m. Eastern Time. It's the end of day review. Let's take a look at what happened yesterday and why did we gap up. Well, is yesterday, which was Friday, we were bullish, right? So market made a bull flag towards the end of the day and we got a nice breakout. So we do have a cup here. Actually we have a cup here and a handle. So market is looking for a measured move target. That's one way to find your measured move. If this is your cup or this is the cup, that's your measured move. Okay. So we did a good job there. Or you got a bigger cup here and a pullback. Is market trying to go higher? Maybe it's trying to go up here, but who cares? So we know that this is going to probably get if it breaks out and opens up here in the morning, we're definitely going to get to that target. But the problem here, we opened up very close to that target. So that means market was bullish on Friday into the Sunday, and Sunday open Asia range started. Look, it already gapped up. Asia range also got a breakout, and the London session is buying. So now in the US session, immediately the US session starts, you have a breakout. In fact, we had 1, 2, 3, or 1, 2, 3 wedged up, and it didn't reverse. So now we have a reset of the count for a wedge. We have a spike, we have a pullback, we have now counting. But what they're showing you is this right here is 1, 2. We're probably going to get up there. That's why this is still target. We might even go up. So we're trying to get a 1, 2, maybe wedge here and then reverse. So tomorrow or after hours, we could continue to buy tonight into Asia and London session. And then tomorrow we could maybe open up here and then come back down from there. So market is still bullish. So because we opened up so bullish and the Friday actually closed last hour is about like 10, 12 bars sideways and up. So that's basically 50% probability of follow through buying at the open, except you had a breakout at the open. Okay. So breakouts are, they're kind of rare. You have a really big gap up, and bar one is not all that great. Regardless, it's a doji. Immediately they started to buy the close of that doji, and they start to buy above it. So that means market agrees that this is fair price and they should be buying. What is it that they are seeing? It's right here. This right here is there is a balance zone. There is more here. You can also see it is on the 50 hourly charts. We have a cup handle, and really we're actually trying to push towards here. So we could continue to push, even though we would come down, but eventually market is trying to go higher. So this is the area, and these marked areas are where market is going to go up. Okay, so yeah, get rid of that for a minute. So the first hour started to be pretty bullish. Second bar is a very strong bull close and it's gapping up. If it's gapping up, that means we have some targets. So bar one, that was the first target that I actually bought, and I started to scalp. So I'm looking for follow through. I want 2R, which is right there. And then we now have 3 bars, 3 gap bars. Bar 1, bar 2, and bar 3. Hang on a minute, everyone. So what does that mean? That means I have a gap here. I have 3 bar gap. So what I'm going to do now, I'm going to get my follow through target. So how does this work? My stop goes underneath 1. I have the 3rd bar right there, right? I am basically measuring this gap right here. So my target is right there and the 2R is right there. I'm more interested in this right here. If we start to close bull bars above it, that is bar is 11, right? So that means is market wants to continue to go up, but there will be profit taken because we haven't taken any profit. Even if we come down, most likely market is probably trying to go to to that target. So here we go. I don't know if we're gonna get it, but this is a pullback, and now we're closing above the 1R, and I'm holding my runner, but the bars are getting smaller and smaller and smaller. But look, we have gotten so very close to it, and then we kind of fail right there. But did the market then continue to go up? Was this a pullback? Yeah. It was a deep pullback, but we did reach that target eventually. But this is where I exit though. I don't hold into it. This is my target. Anything more than that, I'm basically trailing my stop and I'm most likely to be taken out. So it's not like I hold this for the rest of the day. That I have different targets. So for example, I could say, hey, I'm going to take this and that's going to be my target. Or you could take the bar 1 and 2. This is a much better representation of a measured move because look at this body and look at the pullback. It immediately comes down. So that's your target and you're wanting price to get up there. It's not guaranteed that we would get there, but at least try to get the half R. Okay? So look, we did get to the half R and then we pulled back and then we try to get to that, but look, we had a 1 tick front running, but this was still 2R, pretty good. Bulls actually did a fantastic job there. They may not have reached it completely, but they did well. Now the others, let me show you. If you actually take the first 3 bars, the first 15-minute, here's a tip for you. If you want to swing, here is your first 15-minute bar, and we have a breakout already. Look for a pullback. Start buying with the pullbacks. Buy 1 tick above. Buy the pullback. Your target is first this, then that. You must take profit. That's your measured move of the first 15-minute opening range breakout. And not only that, we actually sold with a couple of legs down, 2 legs really, or some will say this is a leg 1 and leg 2. No, this is leg 1 and this is leg 2. Back to the breakout point, but nothing's closing and the bulls show up, buy above it. Target now back to that high, maybe a little higher. There are 27 15-minute bars in a day. We're going to, as long as we stay above the breakout point of the first 15-minute bar, you're going to get follow through buying. So especially if we have big bars and we're taking out those highs again, that's your next target. You need to take profit. And let me show you an example on the prior day, how that works. Okay, so here's the first 15-minute bar. We have a breakout. I can buy the pullback with a limit order at the breakout point here, okay? Or I'm going to buy 1 tick above. My first target is 1 time the ATR. You don't need to use this Fibonacci levels. I like to actually use also these. You can use L's levels, which is 1/3 of any range projected up with 150. I don't really use the 150% for that, but I'm going to show you. You can actually use ATR bar. Look, if you actually project only 1/3, 66, 33%, not the 50%. If you project 1/3 and say, look, we're above the first 1/3 projected level, put a buy order, your next scalp is 2/3, which is 166. And then you should hold it into measured move, 200%. Hold a runner if price is still bullish and nothing closing below the 166. That means we're going to keep pushing higher and keep buying, maybe a runner. The next is 266. It really is, actually, sorry, one time, like one third added and a two-third. Did we get to the 72? No, we couldn't, because we couldn't close above the two-third. And then we start to come down. Look for several legs down. If we are moving underneath 166, we're going to come down to the breakout point and possibly the 50% of the opening range. So we close this bar below the 166. That means take a little bit of profit here and leave a runner to test the half. And then see if we can bounce from the half. And we did bounce from the half. If we were to close below the half, we would have come down to the low, but we didn't. So, and then we bounced there. I'm going to do one more exercise because I want you guys to learn a technique that I use all the time. Here's the first 15-minute bar, right? Do I have a breakout? The next one did, but it's kind of a late in the game, so it's better to, we're probably going to get a pullback, so I can sell at the pullback. I would have a limit order there, and I would scalp, right? So now we close the bear bar. Market's probably trying to go to the two-third, which is minus 66. These are L's range levels that I'm stacking rather than using 50%, but you can use 50% too. You just take a little bit earlier profit. You can use 25%, so you get the quadrants, and you get the 25%, 50%, 75%, 100%. Rather, but I used one-third, which is what he uses. Now, there you have it. So another pullback. Look, we're not getting anybody who sold below this follow-through bar to actually close the bear body. That's actually continuation into here, trap underneath 3. And then it goes right up here. Because they sold here, they're gonna sell at this level again. As long as we don't close above that green line, we're not going up here. So there you go. They sell one tick under. Their goal is to bring the price here. If the bars close below the minus 66, where are we going to go? We're going to go to 100, which is measured move. Did we close below minus 66? No. They tried once, they tried twice, failed. So where's it going to go? Bars are closing above the 66%. That means we're going back to the breakout point. So they could sell the breakout point or we could go up. They sold the breakout point, but nothing is closing below minus 66. So we're going back and forth, back and forth, back and forth. The moment we close, okay, above this, we're going to go up here. Unfortunately, that happened in the next day. Okay, so you can actually use these levels until the next day, the first 15-minute bar closes. Then you can just measure that first one and use the levels. You get a breakout bar, you can buy above it, buy the pullback, buy the bounce, so and so. Go test it out and you will be amazed. So I'm going to now layer that on today's range, today's 15-minute bar, and see what it looks like. Here we go. That's the 15-minute, and we don't have a breakout, right? It came in with the second bar. So we are, however, look, how do I know the first bar is going to get a bull breakout? How do I know how we're going to get a bull breakout? That's because the body closed above the threshold, 79%. That's telling me is next bar probably wants to test the first bar's high and wants to go get the first scalp at the 1/3 up, 133. That's good. Then it comes down. We have a breakout. You can put a buy order above bar 2, or you can look for a pullback to the breakout point. There will be buyers there, so you enter into market with a pullback with a better price at the breakout point of the first 15-minute bar. And you buy it, and then stop order bulls are going to be activated above bar 2. They do. So now we have a bar 4, a bull bar closed above the 133%, 1/3 projected up. That means we should be getting continuation into the 2/3 target, which is 166. 2/3 of this 15-minute range projected up. But I want the measured move. That's what I'm looking for. But everything happens gradually. So what am I looking for now? I'm looking for some profit taking and then a bar close above 166. That came in with bar 7. And then the bulls buy it and we go up. So where do we go? Measured move of the first 15-minute bar breakout. That's a good place to take profit. And then look for um, patterns. What pattern am I looking for? I'm looking for a reversal. So it's either double top or triple top, meaning it's some kind of a wedge top, something. Okay. In this case, it's a spike pullback channel up with 1, 2, 3. Now here's how I count it. I just made things easy for myself. If there's a spike and a pullback, that's the first push, right? I look for 2 more. So spike, pullback, that's first. I look for 2 more. 1, maybe pull back, and 2 right there. So either or. Or you can say pull back 1, 2, 3. You can count that too. Either or. So sometimes you get very clean 2 pushes, and then that becomes your first. This isn't very clean. So this whole thing is 1. That's a pullback. 2, pullback, 3. So there's a wedge top there. Okay. We're going to pull back to one of these levels. Okay. But this is the 15-minute I'm reading. So probably we're going to come down to it because on the 5-minute chart, this is actually a bear bar. So now that you have your range, you can switch to a 5-minute chart. Okay. So here we go. So you have the 5 minutes. You have a nice pullback here. This is where the bull channel began. So we're going to keep pushing and pushing. Sometimes you get more than 3 pushes. Sometimes wedges can have 4 legs. Okay. So we did keep pushing higher, and that was great. And market finally started to come down. Okay. So it's giving you a surprisingly big bear bar. Chances are it's a spike of some sort with a pullback, and it's going to get a channel down. It wants to get back to the 14 low. It wants to get back to the 7 low because there were sellers, and their trap is we're probably going to test the 8 close. And that's exactly what it did because that's where the channel low was. Came down, even came down some more. First we test the 6, 7 low right there. That's where the trap bears got to break even. Then it pulled back because some counted this as a leg 1 pullback, leg 2 pullback, leg 3. That doesn't work. When you have this leg so large and you have between 1, 2, 3 wedge bottom is not very balanced, that's right there is telling you that pullback is going to trap you, and you should be looking to sell and look for something a lot more balanced. So that would be the first push, second push, and third push. Now look what happened here. We moved all the way up to the measured move, and we start to come back down. Where is it going to go? If it closes a bear bar below the 166 or 150%, where is it going to go? It's going to go to the breakout point. If it starts to close below the breakout point, you should be looking for a 66% or 50%. We couldn't even move underneath 79%. So what does that tell you? It tells you market is so bullish, it probably wants to get back up to the 200% and get a breakout. So it wants to get to the next level, which is 233%. When market pulls back to the breakout point, but fails to close bear body, say they close bear body or 2. But if they're not able to get below the 79%, that means this threshold, bullish threshold, is holding all the bulls in place or bears in place and not allowing bears to turn the market bearish. So bears will give up, and they tried and tried and tried and tried, and they failed. So this is still bullish. We're above the bullish threshold. And now you see a big bull bar. That's another breakout. Buy 1 tick above 62. You can put a limit order again if you want to buy the pullback, but we cannot reach there. And then we go up. Where do we go up? 233, almost. But it was the end of the day, so that's the best you can do. Just take the money. I generally front run these levels like a 1 or 2 tick. is because I want to be I'm a retail trader. My job is to get paid before everybody else, because futures market is a first come first serve. If you don't have more than, it used to be if you had a $1 million with your broker, yeah, you got some saying. You can go get a seat in CME. You get better fills. You get, like, there's a line. So think about a huge line of thousands of orders or people, whatever, and you're behind the line. It's like you're trying to get into a very cool club, and they're telling you, oh no, you won't be in before 2 hours. So you better, I hope you brought some food. You're gonna be sitting there and waiting. Okay, those cool clubs. I used to go to Soundgarden in New York City with a bunch of au pairs every weekend, and we would just sit out there in the line waiting. Anyway, so those days are over. I don't do that anymore. But you got the point. So it's the retail traders are like that. So you're behind the line, and in front of you there are a ton of institutional orders. Because think about it, if institutions have like 10 times, 100 times more than the count of orders you have on the chart. Okay, so they get the priority. Plus, their orders never gets moved. Once an institution works with is a with a broker, is that broker place those orders, and they don't move those orders. Okay, is because every time they move an order, cancel an order, whatever, that's order management. They ended up billing their clients. Nobody wants to pay for that, because they're telling an institution, take this $10 million, divide it into I don't know how many lots, and put them as close as possible to this price point. This is where I want to enter. Okay, so that you might be working with like 5 different people at that institution, and that, for example, Jenny from X Capital will say, listen, I placed your orders at closest that price point, but I can't find any more. So it's all, filled. So we're going to have to, like, scatter around. So some of your orders when market gets there will not be filled, okay, if you're that institution. And the many of those orders will sit there. This is why market goes to that price back, because there are a ton of orders that are waiting there. And number one job of CME is to process those orders so everybody makes money, right? Who takes a place in CME? The brokers do, the institutions do. So especially brokers, as they get these orders processed, everybody makes money. So this is why market goes back and forth and back and forth and back and forth. So your job is to find those levels, okay, where those buy orders and sell orders left behind. And then that's how you buy with the pullbacks or sell with the pullbacks. Okay, that's how you find your demand zones and supply zones. Hint, hint. Anywho, so that's what happens. So I use these, like, for example, 79.21%. If market comes down here, but it's not able to close below it, chances are we're still bullish. We're going to go back to those levels again, and we might even get additional breakout points. But if the bears were to close below this level, a bear bar or two, not only we're going to come down here, if we're bullish enough, we can bounce. But if we close below it, we're coming down to here. We might even get a breakout from that end. That happens when you have a trading range open a lot. So we go up, we come down, we go up, and then we close below, we start to come in, we go up, and then we become very bearish. So you can use those levels. Just go practice. Anyway, so let's do a bar by bar review quickly. So you have a dojis, you want to see the bulls are buying. They are buying, there's no bear body here. Market already agreed quickly. It was probably baked into price, and everybody's buying. So bar 2 is a buy. You can buy above it. You get filled above it. I don't like bar 3, but still it's a follow through. It opened at the close of 2. They bought the close of 2 and they closed the bar slightly up. But it's overlapping. It's not all that great. So we come back down at the open quickly, but no bear bar. You can put a buy order. That's a follow through. It's continuation. You can buy above 3 as well. And 4 close definitely very strong. I would put a buy order above it. So that's a stop buy. We're getting smaller bars. You have good bars, you have strong bars, small bars, strong bar, small bar. I don't like this, bunch of dojis, especially if you have a trend and two dojis side by side. Two bull dojis, I would understand. I won't look for a reversal. But if it's a bull doji and a bear doji, and the bear doji, the second doji actually closes on its low, such as bar 7, I wonder if we could actually start to reverse down. How much of that reversal would happen? I would look for a 33% pullback. That's a 33% pullback. That's all I would do. Or you should be looking for a 2.25. So that is 9 ticks. So you'd be looking for, it used to be 5, but look at the ATR value. Up here, ATR was with bar 6, ATR was just about 10 points. You're not going to sell and say, hey, I'm looking for a 5-tick failure. Why? What's wrong with you? ATR is saying I'm 9 points. You should be looking for 9, maybe 10 times, okay, 4. So you should be looking for a 40 to 41 tick failure, not 5 tick failure, not 9 tick failure, not 12 tick failure, not 21 tick failure. You want to learn about this? Go watch, I think it's 15G video series, Els Brooks trading course video series 15G, and learn about it. Now I'm going to prove my point to you. Now you can either measure 1/3 of this bull legs pullback is or half 50%, or start counting points and ticks. Okay, so 2 dojis. I don't know. It's still bullish. It's still buy to close. Bars are getting smaller, but suddenly a bear bar. Where am I going to count from? Definitely from underneath 6 or 7. Since bar 7 is the bear body, and here's what I'm going to do. I'm going to look for a 225 right there. But ATR is, what is ATR? I don't know. Let's see. I don't have time to measure. You can measure and get 2 times the candle size or the body size. I just look at the ATR. ATR says 875. Yeah, okay, 875. So half that is 425. So I should be looking for maybe like a 5.25. I didn't get it, but I got 870. What was it? 875. So it's like 4/4. They got 4.5. But if you went for a 4.25, you already made that, and you got an extra tick to cover your commissions. See that? Right there. What if you actually measured from here? Because everybody who trailed their sell stops, okay, underneath these bars, it was underneath here, then moved underneath 4, then moved underneath 5, and moved underneath 6. This bar closed the bear body, got all the bears activated there. So you're looking for, since it's a bull body, I'd be looking for roughly 5.25. So that would be 5 times 4 equals 20 plus 1 tick. That's L's 21 tick failure. We got 22, 20, yeah, we got about 22 tick failure, but I'm wrong because it should be 1 tick below. So that is your absolute 21 tick failure. Look at that. That is not coincidence. That's called machines trading. You want to learn about this? Sign up with the Brooks price action Brooks trading course. You can get it for you can go to here, go to homepage, sign up. I would recommend you to get these full course, $4.99. You add additional $100 where you learn also forex, and you learn how to count those for forex market. So it's good value. I would get that. So anyway, I would get that, and I would definitely exit out, right? So this is where bulls are going to enter back in the market to bring the price back up here at the very minimum above 4, because that was a very good place to buy. They might have bought above bar 5, so they're going to target that. They might even target bar 6, but mostly they're going to target the 4. So they buy 21 ticks below, and then once they start to get their break even, look, they're actually getting above bar 6, so the market is now going up. So what do you look for? If you bought here 21 tick failure, you should be looking for what is ATR. You bought right there. ATR at that point was 8 points and 23, so roll it down to 8. So if ATR is 8, you should be doubling to 16. There is between 10 to 15 point. So you should be going for a 10 to 15 point minimum with a runner to 20 point. That's 10 to 15. You can get it. So you got about 13. I would take the 10, okay, and I would leave a runner. If the bar closes bearish, I would exit. That's 10 plus because ATR came down. Look, ATR, when we got to that bar, that was a 10 plus. It was going all the way up. Bar 12, ATR at that time, it actually decreased about down to 5.5. So that means you better take your profit or exit from underneath 12 or start scalping, taking some profit, leave a runner. But if market is coming down, that's a much better sell signal bar, right? Is many bulls will start to exit from under because there were sellers here underneath bar 7 stuck there, right? Is they had a failure and then they're going to sell higher, okay? So how much higher? If they sold here, you can also measure about 9 to 10 points higher, roughly 9 to 10 points in between. So if they sold a couple of ticks under, that's actually 10 point right there. So now if that means 40 ticks, 40 to 41 ticks, those bears who sold here will start to scale in. So if you are a bear, okay, you sold here, how much are you going to go for before bulls start to enter? Well, you can take a look at the ATR and decide that. ATR is around a 5, 5.5. So somewhere around the 21 tick, maybe a little bit more, those bulls start to buy again. So you can start to measure from there and see if you can get maybe 525. You would go for 225 first. That's right there, right? Those bears start to scalp. And if there's a break even, I'm sorry, if there's a pullback, I'm sorry, breakout, like pullback, breakout, there's actually a breakout test area. They're going to try to go for 525. They failed. They got 12 tick, 12 tick failure, but then they failed. They couldn't get the 525. So now they're trapped again. So that means they're gonna sell again probably, right? So how much they're gonna sell? I don't know. If they actually buyers started to show up here, that was 225. That's where I would measure 225, right? So I would give it a, I don't know, what is ATR? It started to increase about like 6 points. So I would look for about 10 points first. I would leave it and go for about 10 points. Just about, I don't know, just about. But if you measure from here, they start to buy here. You didn't get 10, but it's between 9 and 10. You see, this is why I scalp at 9 point. And it comes down, but nothing closing. So now you look for 10. And then if you see anything closing above 10, 11, yep, they are. I could hold it for another 20, but then they start to give you bear bar. So basically all you're getting is average 10 points as you buy these pullbacks. Okay, so market is telling you, look, I'm going to give you about 10 points, maybe give or take 9 to 11 to 12, but that's it. If you start to see bear bars closing on their lows, time to scalp your swing. Okay, so that's what you do. Always in bulls. Okay, they see two bull bars. One of them is very strong. They can either measure from the close or high. So you're looking for a 20 points and 2 ticks, and you got it. Look at that, 20 points and 2 ticks. So if you're looking for a better swing, that right there. You want to learn about how to measure your always in targets for bears and bulls, then you have to purchase encyclopedia and study the part 1 always in section for bears and bulls. Okay, so I want to go back to this. So these are pullbacks. And you know market is very bullish because you can see right here the line chart that we have. Look, there's a breakout. There's a breakout pullback. We're buying. We're not overlapping. There's a breakout pullback to the breakout point. We're not overlapping. We're buying. So there could be a negative gap there. There could be perfect pullback. So basically, market is telling you buy the pullbacks, buy the pullbacks. Keep looking for breakouts. Market has been gapping up is more than 20 bars to the moving average. If it is a lot more than 20 bars, I expect pullback to the moving average around bar 40, and I look for another reversal back up. Problem here is we did come down, and I told everybody this is when I actually started my is around 12:30, and I told everybody, look, this is a surprisingly big bar, probably will want to get a leg or two down. And I wouldn't buy right away, but I'm going to expect buyers underneath the moving average. But first, I need to give the bears a chance to break even is because they're stuck here. So I can see that they are trying to scale in. They're waiting for bulls, both with the two consecutive bull bars. They're waiting for bulls to get their 20 point and extra 2 ticks. It needs to go is 82 ticks to give you 80 ticks. So the market needs to move about 80 ticks to give you is a scalp or swing target before bears start to scale in. Immediately bears see a profit taking by bulls and they start to invest in. So a bar like this creating an always in short, excuse me, it's an always in short. So market is going to come down, okay, but it's looking for a place. Those places are underneath 7 and also 8 close. So we're probably gonna get there. In the meantime, bears are getting a spike, pullback, and channel, right? So what does that mean? So that means you're looking for several legs down, maybe 1, 2, 3, and then you're looking for several legs up, okay, maybe 1, 2, 3, to the channel or pullback. This is the pullback leg. And then you're going to look for a double top and you want to sell back down to a buy zone. How strong the buy zone is, I don't know. That buy zone is right here. So they started to sell, right? First, I'm looking for buyers here. Those buyers showed up, but none of these are good looking bull bars. So I don't like this one. This is not a good looking bull bar. And I got 2 bars and I'm sorry, I have 2 legs here or 3 legs here. Bears are counting this as 3 legs. And that area is the resistance. So I'm looking for a double top there. That's top 1 and a top 2. So 1, 2, neckline 51. We're going to break. Where are we going? We're going down here. I'm looking for a buy zone. Right, so that buy zone is right around here. But then there's this, so you can actually extend it back here. I'm looking for buy orders. Now I'm gonna squeeze that. This is the one I'm interested in. This was, we went up, we came down, several legs down. Look, leg 1, leg 2, leg 3. I'm looking for buy orders. The first one is the inside bar 56. So immediately buy orders will be on top of it, but nothing got activated. Then we had bar 58, but nothing again. So now I'm looking for a better buy signal bar. I want it to be a pin bar. I want it to actually test these lows, and I want to see a good body close. Okay, bar 60 is decent, but if I'm going to buy it, I think I'm just going to put a buy order there. I don't want to buy the close because this is a tight trading range. So bears try to sell again. I have 2 dojis side by side, and suddenly bulls start to show up. Okay, that's great. I had a buy order there. I didn't even have to pull it above the bear bar 61. Immediately bulls start to show up, which is great. So where are they going to take us? First, they're going to take us back up to where we made a double top. And if we cannot sell, which they sold, why would they sell here? Because we have several legs down, right? So this whole area is a sell zone. Look, they try to sell once, they try to sell twice, and now we're closing above it. This is now support you can buy. Where's the next sell zone? is from here to there. So you're going to hold it until we get in here, and you're not going to sell the first one. You're going to look for a second one. Okay, bar 72 is a much better sell signal. I could put a sell order there, but I never got filled there. Okay, so what do you do? Just cancel it and see where it goes. Up, there's no selling. We just went up and nobody sold. So if you put a sell order underneath bar 72, hoping price gets back to 64 as it trapped many sellers there, right? You don't get activated. You're safe. Nothing moved underneath 72 to process your sell order. Once we get above 72, we're closing bull bars, cancel that sell order, go long. You're going to target the 32 high and higher. Okay, so what you can do is there's got to be a bull flag there. Where's your channel of the bull flag? Right here. Go for a 1R, which is right there, or take that one since the actual breakout happened there. That's your 1R. So basically you're getting a measured move of the bull channel, bull flag channel projected up because you're entering too late in the trend. Okay, you cannot assume this is going to go up and up. If it wasn't the end of day, we might have gone to the 2R. But because you're at the top of a trading range, flags fail 75% of the time. This one didn't. It looked like it was failing, so I was looking to sell it, but nothing happened, so I bought it. And well, I was already buying, so I was ready to exit. Nothing happened. I kept buying and buying and buying, and then that's another way to measure it. Okay, so then that's the end of day. I told everybody we need to trap the bulls before we come down. It's too early. This is a bull flag. It's not selling. We had a second sell signal 72. Nothing selling. Once we take out the 72 high, that's a fair game. We might have a nice measured move of this channel, and we did, and we got it. So great job, bulls. So basically, you had all these stop orders is bulls. They're buying the pullbacks also. Every pullback to the breakout point bought. You can see it. You should always have a line chart right there so you can count the tops and bottoms. Okay, is just like the institutions do. Institutions look at the line charts. So you have breakout point. This one actually dipped a little bit, but this gap never closed, the bull gap, and they bought it. So that's 1, 2. This is a double bottom bull flag. Target the top, and if you get a breakout, that's great. You can also buy the pullback. Another breakout point, they buy it. This is also another bull flag, buy it. Another way to find your targets, bull flags. I actually posted a bunch of charts, and here's how I measure it. You got an impulsive buy. You got a pullback. The last impulsive bull bar was right there. So I'm going to put my stop there. That's my 1R. That's my 2R. Up, there's another one. There's an impulsive leg up, right? But this time I'm already measuring this, so I won't really measure this one. But if you do, is you buy there, you put your stop there, but you got 2 more bars, so you should be measuring from there. That's your pullback. We go up, so that's your target. We might even try to get up there, but I would take that one. And so take that one. This is where I would take a lot of profit there, and I don't know, I would not hold it because there's also possible reversal. Or is you can measure here, you could put your stop here, you would go 1R. Again, I would take my profit there. So it's so many ways to measure. Once you see these breakout pullback and little gaps are still holding, that means you're in a bull trend. You should be holding. Okay. So finally we come down. Again, these gaps are still open. It's a nice gap here. Bulls are holding. So look for strong bull bars. You can buy above them and target the prior highs and hold. Okay. So finally we keep pushing and pushing. This is the third, fourth flag, final flag. So it's flag 1, flag 2, flag 3, flag 4, maybe a bigger flag, double bottom, double bottom, double bottom. So here's a big flag. Here's another one. Here's a small one. Here's a bigger one, right? So this got to be the final flag. Here's a double bottom, but finally we take out that double bottom. This right here is measured move to the downside. So you can actually take this, right? And this is where I would scalp. I told everybody this is a nice bear bar, but it's not getting good follow through. So look for three bar closes underneath the moving average before buying anything. So we have bar 36 close below moving average after 20 bar gapping. I want to buy, but I don't want to buy right away. I want to see 3 bars closing below the moving average, and then I want to see bulls actually closing above the moving average. First bar 36 closed below. Bar 37 did not, so that doesn't count. Bar 38 did, that's my second bar. Okay, bar 39 is a bull bar, but still closed below the, I can look to buy. If I buy right now, I'm not sure I'm gonna go further up to close this gap, because a bar like this is actually a impulse. It's looking for a double top, okay, or some kind of a bear close below the 36 low to sell. This is a bear flag. So I'm looking for a double top. I got my double top. So if I actually sell, maybe I sold there, put my stop there, that's my 1R, that's my 2R. Roughly, I get it. You got to take your profit. None of this matters because we're not closing below the 2R. We're not going to go to 3, 4, 5R. So you got it. So this is the L's implied flags started with 36, 35. I'm sorry, 36, 37, 38. It got to follow through. You can also measure like this, right? Is right there. You're measuring this. That's your target. Take that. If the bar were to close or the next bar closes below 1R, then you can target that. Nothing closing. Now it went up, but your stop is here. You're still safe. You might be still selling these pullbacks so you can break even because you might be holding a runner for the 2R. Now we got a break, so now you're going to hold it for the 2R. We got the 2R. So you could still use the implied flag right here. It's in the books. It's in the course. But then you get this double top. Okay, extend it. It's the same thing. Same measurement. You get the 2R. You're done. First bar failed to close below. And then you get a bull bar taken out. You're done. This is done. So you should be looking for price going back to run some stops, double tops. Okay, we got very close. Bears are still holding. They don't want their stops to be run, so this is a trading range. I'm looking for either a wedge top or a better double top. This is a much better double top, right? And market comes back and tests this area. And now you're getting a much better wedge. This was not proportionate. 1, 2, 3, right? You're getting some stop orders, but you're selling in some kind of a trading range. Okay, so you don't have too much to run to, too much room. No, none of that. So this is also not a good wedge. 1, 2, 3, not proportionate. So I told everybody when this goes up, that's where the sellers are waiting. Look for a second entry short because spike pullback channel with couple of legs down. When it gets up here, I'm looking for a double top neckline and I want to sell it. And that was a beautiful representation. Now you have a wedge bottom. I want bears to sell. They have tried several times. Look, came down, went up, sold. Went up, sold. Went up, sold again. 3 times they sold. So there is a spike, right? Is spike, pullback, comes down, goes up. When the spike pullback channel gets violated with strong bull closes, no more selling. It's going to come back to it, but you should be looking to buy. So look, right there. This is spike, pullback, and channel down. That right there is supposed to make a double top. Just like here, a double top. And sell into these lows, make a new low. What happened there? You already have wedge bottom. So this is probably telling you everybody else will probably going to sell, but you should be looking because you're smart. L thought you well. There's a wedge bottom. You should be looking for a major trend reversal. So you are looking for a bull bar. Breaches that spike pullback. It did, bar 62. So that's your cue right there. You can buy the pullback to the breakout point where it's supposed to sell. Goes up, pull back. You can even buy above it. Look, It tries one more time. Why? Because bears need to sell twice before to give up, because there were probably sellers here, sold, trapped. They sold again, maybe higher. They're trying to get back to where they sold. Machines will sell because they're reading. Some machines read patterns. So they look for this, they go there, they sell, they're trapped because market went up. So they count whatever the points or ticks, and they sell again. They come down and they see they're not able to close a bear body here to get down to here. What are they going to do? They're going to exit. Once they exit, you get a bar that closes extremely weak bearish. That's your second sign. If you haven't bought yet, you got to buy. That's your first entry long, second entry long. Just buy it. And then what you're going to do is you can measure. So maybe you can measure from there, right? That's I measured from here, and that was my 1R, that was my 2R. Or you can say is, no, I'm going to measure from here. I'm going to go for that. It's the end of the day. I'm going to take my money and I'm going to be done with this. Okay. Or you can measure where you entered, one tick above 64. And that's what I did, and I was done with it. So good stop order market again, but it gotten a little bit hectic here. So same thing, you get a spike pullback, right? Maybe here's another one right here, spike pullback, goes up, right? You're gonna look for double bottoms and you're gonna buy. You can take that because it's the channel of the bull flag, and you're gonna project it maybe 1R, 2R. Well, let's do the math. If you measure from here, you got 1R. I measured it from here. That's 1R. All right, so is good. I mean, good effort by bulls, but it turned into a trading range. So you have a leg in a trading range. We got a leg in a trading range. So I warned everybody. Yes, we will get the breakout because I have target here, 58.2350. I posted this pre-market. And I said these are my swing targets. And we need to trap the bulls first before coming down. And when we do come down, it's going to be the moving average. So that's what we did. So I'm going to take two more questions here, and I'm going to end the session. I believe you went short on 55 after being long at the point of bar 54. Yes, I did. How, or rather what you look at to flip to short? That's exactly what I explained, which is a pattern. I've always been a pattern trader. L teaches patterns. You can count points, but somehow you have to look at patterns. And his favorite patterns are flags, double tops, double bottoms, wedge tops and wedge bottoms, and head and shoulder patterns, whether it's head and shoulder patterns for bears or inverse head and shoulder patterns for bulls. Okay, so flags are the most important ones. So for example, here is I explained to you that this creates an impulsive sell that needs a couple of legs down. It is what we call a flagpole, which is the spike. After a spike, you're going to get some sideways and down price action if the spike is a bear spike. So that means you're looking for a pullback after the spike. That's what the part that everybody forgets about, which is the most important part, because it gives you a great level to re-enter the market bearish. If this is a bear spike, mark that pullback or the entire bar, and then let market to sell a little bit, and then you can buy that pullback, sell once, sell twice. If we're taking out that neckline with a bear body, sell and hold all the way down here, maybe a breakout. So let's do that. Let's identify quickly. So we got the spike, we got the pullback. Which pullback is the pullback I'm looking for? That's this bar right here. So I'm going to only take the body and high. This one went up a little bit. You can extend it. Who cares? Doesn't matter. But look, this is the first double top we made and sold. But this is part of the spike, pullback, and channel. So it's not ready. I want to sell again, but I have to look for a pullback first. Okay? So I'm looking for a pullback into, you don't even need is that high. This is what you're looking for. So there's no good sell signal bar. None of this bar 49, 50, they're not good. But what did I tell you is, okay, so I need a good sell signal bar. The very first one is bar 51, but it's the very first one. It's your low one, okay? If you put a sell order underneath, it's not ready. It needs to go back up again. What did I tell you guys? How do you know that if market is in a swing long, say you bought this, you don't know anything about the spike pullback where the sellers are with this pattern, okay, you bought right around 1:30 p.m. and you're looking for about a maybe an hour or 2 hours, is up bull trend. Generally around the sixth bar, 4 or 6 bars, it either gets invalidated and reverses back down because there's a prevailing bear trend, or it prints 6 bars and then keep printing strong bull bodies. That means you have to expect 1 hour or 2 hours sideways and up price action. This one went up 1, 2, 3, 4, 5, 6, 7, 8. Like it went really the 6 bars, but it can't seem to go above. So this is dying. So what did I say? I said, look, I'm long, but as soon as I see this neckline is being taken out and this open, this is the strongest bull bar, created the small pullback bull trend, supposedly. It failed. If the bears take that out, this is no more a bull trend. So as soon as it came down, I had my stop there. It hit my stop and I reversed it automatically. And then whatever I was making here and then losing, I took profit here. Then I start to see whether we're going to close above this and become bullish, okay? Or we're going to get the first sell with bar 51 and then second sell with bar 53. You can actually, everybody start to sell underneath bar 53, and then we started to invalidate this, what seems like a starting of a trend, and then I exited and I sold it and I made money. But then I saw, okay, this isn't going anywhere, and market has been selling. There's a spike in channel down, but this time my pullback bar is right here. So I know market is going to go up to the bar 56 body and high. Around the body, they're going to try to sell. The first sell signal is bar 59. Second sell signal is bar 61. If you put a sell order underneath bar 61, nothing's getting filled, and suddenly we're taking out the pullback bars high. So what do? You cancel it, and you look for a price to come back to it, put a buy order, and go long. You're going to double that to upside, if not triple. So then you're going to target the other old spike and pullback. So here's a spike and pullback. Here's a spike. And so you're going to target this area. Are we closing a bull bar? Yes. Where's the next one? Maybe right here, maybe right around there. That's the bar you're going to be targeting. We got there. We got a sell signal bar, but it's not all that great. I said I wouldn't sell it. This is bullish. We closed the gap. That means we're going to go test the 32 high. Most likely we're going to get a breakout with it. Look, for tomorrow, you have a spike and you have a pullback. We're probably going to come down here. So you're going to mark this bar, and when price gets there, you're going to try to swing from there to the downside. And same thing also applies to bulls, right? So you have spike and pullback. Sometimes you get this, like here's a spike, pullback, goes up, first pullback, they bought it, and then channels up. So next time, where will the market gonna go? That's the pullback. So you're gonna mark this bar right here. When tomorrow price gets down here, you're gonna buy it first, second. Your goal is to bring price back up here and close this gap. If the bulls can do that, then we take out that high. If we fail, then you're going to look for more bears, taking out those, and then you have a measured move to the downside. So it's all there is to it. You learn these as you watch bars and you trade them, and it's not that difficult. It's actually a lot more cleaner on tick charts, I believe. So let me go to 4,000 tick chart. Okay, let's see. Yeah, right here. Maybe not, but maybe not. Here's a spike, pullback. I would take that. They sold here, they sold, but that failed. So here is another one. Here, spike, pullback. It's not all that clean. Maybe it was 2000 tick chart. I used to trade these 2000, 4000. Let's see. Here is spike, pullback, sells. I mark that area and I look for a double top, strong bar, sell. I take that, and if it comes down more, there's got to be a balance zone. That's where I'm targeting. I would take profit there. So is another one right here. Spike, pullback, you mark this bar. If we break above that bar, don't sell. Look for a pullback and buy it. You'll make money and you target that high. And then if we keep going higher, then you target that. So same thing. Let's see. Here, spike. Look at that. This is the flagpole pullback. Okay. So mark from that low, maybe the last bar. Wait for price to get here. Look for a first buy. This is your first buy. Look for it to come down again. Look for a second closing strong bull close. You can buy the close. You can buy one tick above. Target there. If it close a bull bar, take some profit here and then leave a runner and take that stop from here to here. Now you have a break even and the market keeps going up and up and up and you're making money. And then you utilize these higher lows for your stop trailing. It's not difficult. It's just you got to get used to it, right? So yeah, like here, is there a spike? No, there's no spike. There's no nothing. Is there a spike? Yes, spike, pullback. This one's a little bit tricky. Here's a spike. Pullback comes in several legs up. So I'm going to take that one all the way to here. So basically this is the first test, sell, second test, but this is not a good sell signal bar, but this one is. Maybe I can sell this one, this one, this one. I don't like 206 is not a good sell signal bar. It's got a wick mile long. But this one is, I could sell below that one. And I would target that low. Oh yeah, look, there's one right here. So you have spike, flagpole, second leg up, pulls back, right? That's a pullback, goes up, pulls back. Ooh, really good buy signal bar, 160. Buy above it, go long. I don't know what you're buying into. I have nothing. So then just measure this. That's your target. They're everywhere. All right, let's get back to the 5-minute chart. I'll take one more question. Okay. You mentioned you posted support and it stopped there. I don't know what the rest is. And then you posted where did you post? Oh, where did you post support and resistance at? What does that mean? I don't know what you're asking, Shaw. You want to ask again? Or send me a message, maybe post a chart or something. I'm not understanding the question. I've been posting support resistance all day, marking. Thanks for this tutorial. It's a game changer. Yes, that's what I want to hear. Is the measuring tool, I don't know which one you're talking about, but whatever, it's good. Is the measuring tool the box you use available on TradingView? What's it called? Measuring tool. Do you mean the this right here? If this so, yes. It's called Fibonacci retracement. You trace it just like the TradingView. You have options. Is here, let me show you. I have is TradingView actually. Hold on, let me open it up for you. Let me open the chart. Okay, here's trading view. Okay, so I'm gonna do RTH. Okay, so here's my trading view. Is this one right here. Right here. Fib retracement. So say I want to measure this entire leg and I want to project it. Okay, so here's the projection of the leg. It pulled back 33% and went up to this target, which is 150. Just a 50% of this leg, it went up and then it came back down and bought again. It was supposed to go up here, but failed. So how do you measure, how do you adjust it? Double click on it and this comes in and this is where you change. You can also save it as a template right here. I have saved a lot, I guess. But anytime, you don't have to, you can just hit OK. It's going to apply every time, like you middle click and get rid of it. Again, when you apply it, it's the same settings will apply. Middle click and goes away. So that's how it works. Does the last hour bar form a sell signal tomorrow? The last hour is not a sell signal. I think we're going to end up going a little bit higher. Although, problem here is that is last hour, what seems like a sell signal bar, but it's not. You're going to have to wait for, oh, it is already 5 p.m. Sorry. Okay, so market already closed. This is maintenance hour until 6. I don't think this is a sell because this is not a good sell signal bar. There could be buyers underneath that bar. Okay, so but this right here is probably going to try to come down a little bit and then buyers will show up. So if we open up maybe here and start to come down because you have a spike pullback, we need to come down a little bit. The reason why we need to come down is bar 64. So here is ETH. Look, this one already started to come down, you see? Because it's a bear flag. What they're trying to do here is the head and shoulders pattern, neckline. They're trying to break the neckline. They're trying to come back down at least to the 50% of this, which was the bar 64 on RTH, so it's 250. That's because this was one point such a big bear bar. It was trying to get back down to here where bear sold, keeps selling, and trap. So it needs to come down here. So the bears are scaling in. If a bear sold this bar, maybe they sold a close. You learn about this in how to scale in video series 35A, B, C. So if a bear sold here, what you do is you measure this is all the way up here. What they're going to do is they're going to keep selling, okay? And they're going to hope the market comes down to here, market comes down to here, maybe in between. So they're looking for at least half. Okay, so if they sold up here, it won't work that way. They need to look for a good looking bear bar. That's bar 264. So they measure from there, and this is what they want. They want that to be tested. And that happens to be the 50% of this bar's midpoint. So after hours, we can actually pull here and then look for buyers again. Since this is spike pullback, market will probably gonna try to go up this entire area. So if we do come down like this, then you're gonna look for buyers here. Okay, they're gonna try to sell. If the second sell does not get activated and the bears are not selling, then you're gonna look for bullishness right up there. And then bulls will try to get up to here. This is going to be their target. So look around here, some buyers. Final question. All right, so for tomorrow, about your question, The question about tomorrow, Yen is asking, is this a Globex has already done that spike pullback, sell for tomorrow? Well, today we have actually closed a pretty strong bull bar. So, and we have a gap up. Now, I would look at this whole situation, right? Is we said that if bulls show us good looking couple of bull bars, look, this is bull flag. It came down with several legs down. This actually start to create bull flags. If tomorrow we might need to actually test that high. So even if we come down a little, we're going to try to go up. If we close tomorrow bullish, we can even go right back up. So what they're trying to do is they're trying to turn this around and get above the 200 SMA. But we could go there. Okay, here's what can happen. Tomorrow we could get above tomorrow's yesterday's high and then go up here. So we could go up there and then we close below it. So then the next day we come down because EMA goes like that. Maybe we test that and then we start to come down. That's where the buyers are going to be and we're probably going to go back up. So that means we have leg up, leg down, leg up, correction up. So we have wedged up. Then we could come down. So I think market is trying to become bullish, but there's a breakout test here from January 13th. Low, so that's where they're trying to go. Maybe we'll breach a little bit, test around here, and then start to come back down to the 20 EMA. So tomorrow we might actually test yesterday's high. That's yesterday's high. Okay, so tomorrow we go up there. Maybe we get 1, 2, 3 wedged up and then come back down. We'll see. All right, you all have a great day. I will see you guys. I don't know when. Let me take a look. I believe Tuesdays are now Elbrooks and yeah. So tomorrow is Elbrooks and Brad. I come in the afternoon Wednesday after Tim Fairweather, and then I'm on Thursday. Tim Stout and I we switched. So he's going to do the Friday and I'm going to do his Monday. Okay, so I'll see you guys on Wednesday, but I'm going to be on Discord tomorrow. So bye, everyone.